Do you want to know the biggest scam in retail trading right now? It's definitely not fake signals, it's not overpriced prop firm challenges, and it's not even shady brokers with terrible spreads. It's actually way worse. It's the entire fix your mindset first industry. And yeah, I know that some people are gonna get triggered by that, but honestly, I don't care because I fell for it too. I was that guy, blowing account after account, sitting on my bedroom floor, stacks of trading psychology books next to me, convincing myself if I just fix my mindset, I'll stop losing. Spoiler, I didn't stop losing. Not for a long time. And today, I'm gonna tell you why, and more importantly, I'm gonna show you exactly what works, so you have the chance of not wasting years just like I did. So let me paint the picture for you. At this point, I had already lost $43,000 trying to figure out trading. And before you think I was just lazy or chasing signals, well, I did that too in the start. Spoiler, signals doesn't work, bro, but that's for another video. But after I was done with that, I became obsessed. Waking up early, meditating before every market opened, and journaling after every trade that I made. I was tracking my emotional state from 1 to 10 like some self-help monk. I even built a color-coded Excel sheet where I logged every feeling before, during, and after every trade. Fear, greed, FOMO. Bro, I was doing more mindset work than trading work. And here's the punchline. I was still losing money over and over and over. Do you want to know what finally snapped me out of it? One day after a red month, I opened my journal and I flipped through months of emotional notes, and I realized something brutal. I had tracked my feelings for 7 months straight, but never once had I tracked my actual win rate. I knew exactly how I felt before, during, and after every single trade, but I didn't know how many trades that I won or how many trades I'd lost for that sake. I didn't know my average reward. I didn't know my drawdown profile, and I didn't know my expectancy. I was emotionally self-aware, some guru of wisdom, but I was mathematically clueless. And that's when it hit me. My mindset wasn't the problem. Nope. It was an edge problem. And here's what most people don't tell you. Mindset, it sells. It's easy to package, it's easy to market, and it's the perfect trap for struggling traders. Because think about it. If you're losing and someone tells you, it's not your trading, it's your emotions, you'll believe it because it feels empowering. It feels like something that you can actually fix. So what do? You buy the next mindset book, you sign up for the next psychology webinar, you join a Discord server full of people talking about trading discipline and emotional mastery. Meanwhile, your risk management still non-existent. Your entries still random. Your edge still undefined. And the gurus, well, they're cashing in. Because as long as you stay focused on the mindset, you'll be distracted from real work. Now let me tell you why mindset, it feels so good. It's low resistance, it's emotional, and it feels productive. It's called mindset mastery for a reason. You read a chapter, you highlight a motivational quote, you close the book, and you feel like you've done something productive. You watch a reel, some guy talking about work, life, discipline. You love it because it inspires you, but you haven't done something. You've literally just avoided the hard work, like backtesting, like tracking, like building a trading journal, a proper trading journal that's about numbers, data, and not feelings. You're literally avoiding building trading up as a business because building a business is boring. And mindset is comfortable, data, it isn't. You see, spreadsheets, they don't care how you feel. Your win rate doesn't care about your affirmations. Your risk to reward profile doesn't care whether you meditated or not this morning. Trading success, that's cold. It's mathematical and it's brutally honest. Now, before I tell you how I fixed this and actually got profitable, let me tell you about the free traders that I see stuck in mindset land. Maybe you'll recognize yourself here. Type 1 is the emotional gambler. This is a trader who's always saying, I know what to do, I just can't control my emotions. They'll risk 5% on a trade, then revenge trade when it goes wrong, and then blame it on lack of discipline. But here's the thing, they don't actually know what to do. They just think that they know what to do. Type 2 is the over-analyzing trader. This trader has read every psychology book, every book on market structure, every book on candles and patterns and deviations and butterfly patterns and Fibonacci. They know all the cognitive biases. They can quote Mark Douglas word for word, but they're paralyzed by analysis. They'll spend 2 hours analyzing the charts, analyzing their trading psychology, and they'll spend 2, 5, maybe even 10 minutes on their actual trading plan. Type 3 is the hopium collector, and this is a dangerous one. They're addicted to inspiration. They watch mindset and motivational trading videos every morning. They follow 47 successful traders on Instagram, YouTube, and Twitter who all post screenshots of big wins and a fancy lifestyle. They're high on possibility, but they never do the work. Which one of you? I can tell you that I was all free on different parts of my journey. So after blowing those $43,000, I did something I haven't done for years. A guy called Kurt literally just called me out on this and told me that it wasn't my skill that was a problem. No, it was me. Fuck's sakes, right? So what I did is that I stopped trading live for a full month. I locked my live account. I went deep into data. I chose one setup, just one setup. No more jumping between strategies. No more trying to find that holy grail. No more shining objects. It was a very simple 1 hour breakup setup on Euro USD. I went back in time, back to what we could call the future. I pulled up 1 year of historical charts on Euro USD and I logged every occurrence. The entry signal, the stop loss, the take profit, the outcome. Every single one. Over 300 trades. And when I was done, I had clarity for the first time in my entire trading journey. I knew my win rate, my average reward multiple, my longest losing streak, my expected drawdown, and my monthly expectancy. And here's the kicker. Suddenly, I didn't need mindset hacks because I trusted my edge. I could take a loss without spiraling, and I could hold through drawdown without freaking out because I had numbers, not hope. Now let me pause the story for a second and teach you something that I wish someone had taught me a lot earlier. So here's what it actually means to have an edge. An edge is a statistically repeatable pattern that over time produces positive expectancy. Let me give you a small example. Let's say you backtest the setup and you get these results. You have a win rate of 48%, you have an average risk to reward of 1 to 2, and you have a max drawdown of 12% over 100 trades. Now that's an edge. It means that if you take that exact setup, literally my strategy, but with a little bit different numbers, my numbers are a bit higher. If you take that setup and executed it over 100 trades, you'll most likely win 48 out of those 100. And if you risk 1%, you'll have gained 96% minus the 52% in losses, which is 44% in profit. Now, that's an edge. Now compare that to where most traders they are. They're trading setups with no data, no tracking, and then blaming mindset for inconsistent results. Now here's something that'll probably blow your mind. Most traders, 99%, don't even know that their strategy can mathematically make money. Let me show you what I mean. If you have a 40% win rate, so let's say you risk 100 to make 100. You risk 1 to make 1. That's 1 R to make 1 R. Your expectancy is negative 0.0 R per trade. That means over 100 trades, you'll lose 20 R. And if you put it like you risk 1% to gain 1%, you would have lost 20%. No amount of mindset work will fix that math. But here's where it gets interesting. If you have the same 40% win rate on 100 trades, but you risk 1 R to make 2.5, your expectancy becomes positive 0.4 R per trade. Or let me put this in layman terms. You go, you say 40 times 2.5, that's 100. You subtract the 60 losses, that is 40 R in profit, or 40% if you risked 1%. Now you're profitable. Same win rate, different risk to reward, different outcome. Now most people haven't tracked the thing. They don't know if it's profitable mathematically. They don't know anything about what they're doing. They just keep trying something. They see 3 losses in a row. And they're like, oh, this didn't work. Then they go try another thing. Say, see 2 or 3 or 4 losses in a row. They're like, ah, shit, this didn't work. And they go try another thing. And this is one of the reasons that I laugh when people say, I just need to increase my win rate. No, you don't. You just need to understand the relationship between win rate, risk to reward, position size, and frequency. And most traders have never done this calculation, and they're flying blind. And then they're wondering why their emotions are all over the place. Now, your emotions aren't the problem. Your lack mathematical clarity is the problem. So let me ask you a question and be honest. When was the last time that you tracked 100 trades? One specific setup with clear entry, stop, and target rules. If the answer is never, you're not a trader yet. You're a hobbyist, a dabbler. And I say that with love because that was me for a long time. But the second that I got serious about starting to treat trading like a business, everything changed for me. Funny enough, that's when my mindset finally got better. Not because I read another book or saw another YouTube video, but because I built trust through data. Do you want to know why you're emotional when you trade? It's not because you're weak. It's because you lack discipline. It's ultimately because you're trading with uncertainty. Think about it. If I told you to flip a coin for 100 times and I'll give you $2 for every heads and you pay me $1 for every tails, would you be stressed? Would you need to meditate before every flip? No, because you know how the math works. You know the process. Trust the process. Because if you flip a coin 100 times, you are most likely gonna get either 48 heads and 52 tails, or 49 heads, 51 tails, because you have enough data to play out the probability of getting heads or tails. But in trading, you don't know the math. You don't trust the process. And that makes every trade feel like a Russian roulette. And that's not an emotional problem. That's an information problem. It's a data problem. It's a lack of structuring trading like a business problem. So here's what I want you to do, starting today, right now. Step 1, pick one setup, not 3, not 5, 1. Step 2, go back and backtest at least 100 trades on that setup. Yes, 100 minimum, preferably more, because you need 100 trades in order to actually play out the probability. You can't do that on 5 or 10 or 15 trades. I have a 65% win rate. This fall, I lost 10 trades in a row. Every other normal human being that has not built trading like a business would, if they see 2, 3, or 4 or 5 and 10 losses in a row, think there was something completely wrong with the way they're trading, with the strategy. And well, I just kept going because I know that I have an edge and I have data to rely on. So you need 100 trades. Step 3, you have to track your actual stats. You have to track your win rate, your average arm multiple, your drawdown, and your longest losing streak. Step 4, forward test it live with micro risk. Step 5, after 3 to 6 months of real data, then start working on mindset for execution discipline. Because now you'll finally have something worth being disciplined about. You'll finally have some data to look at. You'll finally have something to tune and tweak to yourself, to the way that you're trading, to the market. But let me get a little bit more specific about how this process works. So I put it very nice and neatly here so you can literally just take a screenshot of it and write it down or whatever. Day 1 to 30, research phase. Pick your one setup, backtest minimum 100 occurrences, calculate your edge, no live trading. Day 31 to 60, microtesting. Forward test with smallest possible size, track every trade, focus on execution, not profit, build confidence through repetition. Day 61 to 90, scale evaluation, review your forward test data, compare to backtest result, consistent, gradually increase size. If inconsistent, back to research, figure out why it's inconsistent, figure out if your risk to reward ratio is off, figure out what you're doing wrong. You have data, you can look at the data, you can figure out what's wrong with the data, and then you can use it to correct the data. And ultimately, get your own personal edge in trading and scale your life to the infinite. Now, most traders, they skip this process. They just want to jump straight into making money. And that's why they stay broke and ultimately quits and start looking for another shiny object. So the next time that you catch yourself highlighting another quote, writing another journal page about fear and greed, or buying another $97 mindset webinar, pause there for a second and ask yourself, am I actually fixing the problem here, or am I just avoiding the work again to do a bunch of mindset? Because here's the truth, mindset doesn't create winners, mindset protects winners. And if this video woke you up a little bit, drop a comment right now. That would be much appreciated. I would love to hear your thoughts. And then tell me which trader you've been, the emotional gambler, the overthinking analyzer, or the opium collector. And if you know a trader stuck in mindset fairy tale land, send them this video. Now they probably won't watch it to the end because it's gonna damage their ego, but you did, and that says something. Subscribe if you want more content like this, start tracking, and I'll see you guys later.